Draper, joined here today with Kerr Neilson, CEO of Platinum Asset Management, and Andrew Clifford on my left, the Chief Investment Officer of Platinum Asset Management. And today we're talking about international investing.
So, Kerr and Andrew, the Australian dollar, particularly relative to the American dollar, is a hot topic at the moment. We saw that George Soros has been in the market in the last couple of weeks shorting the Aussie dollar. Do you think this is the start of a run against the Aussie dollar, and how do you think investors should position themselves out of Australia?
Well, as you know, we've been tending to be quite negative on the Australian dollar on the basis that China was going to go through a period of adjustment. And so we've been not owning it now for at least a year and progressively reduced our position through that time. Our view is that it will go weaker, and we're positioned that way. So we're actually short.
So we've had, I think the way you can look at the Aussie dollar, you've really had everything going for it for several years now in terms of commodity prices and importantly interest rate differentials. And that it is just, but also more importantly the intervention of central banks around the world. They've been looking for currencies to buy, and they've been one of the long ongoing buys of the Aussie dollar, and all of these things are essentially, if not having come to an end, are coming to an end. And most notably, the interest rate cuts we had here the other day. So, it's not particularly that it must fall away, because there aren't a lot of other good choices in currencies out there, and there's still many good things going for Australia in terms of government indebtedness. But clearly, as those interest rate differentials fall from here, as we think will happen over the course of the year, that there will be more downward pressure on the Aussie.
And do you have a view, and this is the most difficult question, do you have a view at where the bottom might be for the Aussie dollar?
It's hard to say, because it really depends on, it depends on the time frame a bit and quite why it is unfolding. So if we just continue to sort of see this general malaise in the domestic economy, it might be another 5 or perhaps another 10 cents. But it really just depends on what happens in terms of whether there's other secondary effects. So in the housing market, we still have households here are still quite highly indebted, and if you potentially could have another leg down based around a more serious contraction perhaps. But it's very hard to know. Again, you have to see as we travel the path quite what the next sort of phase where that might take us.
Thanks.
We certainly don't think it's about to collapse completely. We'll just have step downs and then some reassessment by players, because they still are getting a positive carry, which they don't get from many other currencies.
I think in the simplest thing, this is one of we like to look at investments that aren't popular. That's the popular investments are the one you want to stay away from in whatever asset class you're looking at, and the Aussie dollar is been one of the great popular things to own for some time now. So doesn't mean it will go down a lot, but certainly we don't think there's a lot of upside from owning the AUD dollar at this point.
The trend has changed.
Yes. Thanks for talking currency today, and for more updates on this subject, stay tuned to the website.